Seeing this topic reminded me of the financial crisis of 2008. The financial turmoil that swept the world was a crisis triggered by the bankruptcy of the U.S. subprime mortgage. The impact of the subprime mortgage crisis was huge. Fund investment was forced to close. The price has shrunk sharply, leading to a crisis of insufficient liquidity in major global financial markets. Regarding the financial crisis, Mr. Howard, the founder of American Oak Capital, had a very classic definition. He said that before the financial crisis, there were 4 characteristics. First, people believe that the risk is small and that investment risk is a friend of investors. Second, asset prices are high, especially stocks, real estate, etc. Third, the potential return on assets is low, that is, short-term interest rates exceed long-term interest rates. Fourth, investment risks are high, and asset prices have fallen sharply. Based on these 4 characteristics, compared with the current U.S. financial market, I can't help but startled me into a cold sweat. A 10-year bull market in the U.S. stock market has seen more than 2 occurrences last year, and the short-term Treasury interest rate exceeded the long-term Treasury interest rate. This situation is often a precursor to the financial crisis. And virtual currencies such as Bitcoin have plummeted by more than 80%. Does this not mean that a crisis is about to erupt in the U.S. financial market? In today's global economic integration, if the United States financial crisis breaks out, it will be very difficult for China to survive on its own, and it will inevitably suffer a lot. So, if the financial crisis really comes, how should we deal with it? The first thing to be clear is that if a comprehensive financial crisis really breaks out, no one can be completely spared. What we can do is to reduce the losses. Under the influence of inflation and money becoming less valuable, even if the money is in a bank, it still cannot outperform inflation. So, if a financial crisis occurs, how can we prevent the assets in our hands from depreciating? Assuming a global economic crisis in 2020, how do you protect your assets from shrinking? Withdrawing from circulation investment when the crisis comes. If a financial crisis occurs from time to time, the stock market, property market, and commodity prices will shrink. At this time, if you hold stocks, futures, and funds, in addition to the monopoly industry or the necessities industry, you can basically consider selling, wait for the bear market to fall, and then enter the market to dip. Don't hold stocks with low dividends, you can sell them directly. Therefore, in the financial crisis, due to the leverage property of real estate, the bubble is usually the hardest hit area, so try to sell investment real estate before the financial crisis, leaving a self-occupied one. 3rd and 4th tier cities are basically for sale. In Tier 1 and Tier 2 cities, consider whether to sell off according to the location and the rent ratio. If the rental return rate is too low, less than 4% per year, it is recommended to sell off. P2P products, cash out early, so as not to run into the other side. Even Madoff got off in 2009 after the financial crisis, let alone other people. Bitcoin, it may experience a crash with the economic crisis. It is better to close it early. It has already crashed once in 2018, and subsequent crashes will be the norm. Assuming a global economic crisis in 2020, how do you protect your assets from shrinking? Second, holding cash. If an ordinary office worker is also responsible for high-leverage living conditions such as housing loans, car loans or other consumer loans, he will not have too much money, so it is not necessary to face too much in the face of the financial crisis. There is too much uncertainty. Even when the local currency depreciates when a crisis occurs, the ratio of cash to other financial assets is smaller. Therefore, we should try our best to sell other types of assets and convert them into cash holdings. Assuming a global economic crisis in 2020, how do you protect your assets from shrinking? Third, allocate some gold assets. Because when the financial crisis erupts on a large scale, the currency will depreciate significantly, while gold has the function of preserving value, so you can use the cash in your hands to buy gold spot. Since ancient times, gold has been favored by people as a hard currency commodity. In the past, currencies between international trade have been used. The gold standard used before the 20th century indicates the share of gold. At present, a large number of foreign exchange reserves of various countries are also. This shows that the value of gold continues. Gold is a safe haven asset. Trends in the global economy and international trade frictions will affect gold. During the economic crisis, financial markets have a huge impact, such as stock market shocks, falling, etc., but the price of gold often contrasts with the crisis. The economic crisis is intensifying, and the trend of gold will get better and better, and even usher in a bull market. In the current financial crisis, if you have assets on hand, you can buy some gold. As an investment product, gold still has certain risks and losses, but in the long run, investing in gold has advantages, and the possibility of confrontation is a good one. Investment options. Assuming a global economic crisis in 2020, how do you protect your assets from shrinking? Finding safe haven assets in global markets. When the financial crisis is approaching, there are various types of asset allocation, and geographical diversity is even more important. You can try to allocate more assets away from the center of the crisis. The so-called safe haven assets refer to assets that are still strong, stable in value, and pursued by investors when major political and economic impacts occur. Among the best-known safe haven assets are the yen, Swiss francs, the US dollar, and gold. The portability and scarcity of gold as a precious metal determines the risk-saving function of gold. Gold and silver are naturally non-monetary, and currencies are naturally gold and silver. The US dollar is the most widely circulated currency in the world, and the issuing country behind the US dollar is the United States. Therefore, every change in the US dollar index affects the trend of a large number of currencies in the foreign exchange market. The trend of the US dollar determines its hedging nature. Switzerland is an internationally neutral country. The political and economic environment has always been very stable. With Switzerland as a place of wealth for the global rich, the local financial industry has a very strict risk monitoring system, so it can also maintain security and stability for a long time. As a rule, the Swiss franc has also long been regarded as a safe haven currency. Excluding the above-mentioned several safe haven assets, due to Japan's unique economic characteristics, low to negative interest rates, long-term foreign exchange surplus, strong liquidity, and stable economic environment, it cannot be eliminated that it can always remain strong when the crisis comes. In the past 20 years, the yen has reflected the characteristics of hedged assets in the major economic crises. Even some time ago, September 6, in order to reduce the United States trade deficit, it issued a warning to Japan, implying that Japan is the target of the next sweater battle. After the report was issued, the yen remained exceptionally strong against the US dollar, even rising by 0.8%. In June of this year, reporters can poke the Nuggets June monthly report. Mature countries' property market generally enters the adjustment period. The stock market bubble will be blown to the property market. During this period, the world's major currencies, the US dollar, fell against the US dollar, and the renminbi continued to hit a low of 7. Only the Swiss franc and the Japanese yen remain strong. Knowing the above various safe haven assets, for ordinary investors, how to use these safe haven assets to reset the assets so that they do not shrink. The easiest way is to hold cash in Swiss francs, Japanese yen, US dollars, these three currencies. This is the method with the highest liquidity, lowest risk and lowest return. However, for each person's foreign exchange purchase amount of $50,000 per year, unless these foreign exchanges are needed in the future, holding only $50,000 in foreign exchange cash is of little significance and there is no additional interest income. Assuming a global economic crisis in 2020, how do you protect your assets from shrinking? In summary, when we have a financial crisis, it is difficult to guarantee the value of our assets. We must find ways to reduce the depreciation of funds and losses, and it is necessary to buy some hedging products at the right time. After the financial crisis, the capital market fell into chaos. After the economic turmoil, the stock market has undergone a huge baptism. At this point, you can invest in some stocks or funds. At this time the price is low and the risks are relatively controllable. Then wait for the capital market to slowly recover.